Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar delivered an impressive performance on Friday, surging past the key level of 66.4045 resistance and along with that breaking through the 60-day simple moving average. Traders are now eyeing further gains in the short term that may lead on to 67 to 68 cents, given the fact that we've cleared the 60-day simple moving average and a break of 66.90 may ignite further moves initially onto 67.45 to 67.80 and then close to 68 cents, with any pullback likely to be shallow and support seen at 66.30.35. Meanwhile, in a Friday speech, the RBA Governor, Michelle Bullock, stated it's too soon to cut rates due to persistently high inflation. The RBA plans to lower inflation while maintaining labour market gains, with no rate changes expected this year. Positive economic data last week eased concerns, however, about the US downturn, with investors now eyeing the Jackson Hole Symposium for potential rate cut guidance from the Fed Chairman Jerome Powell. Softer US inflation, strong retail sales and lower employment claims last week suggest inflation is near or close to the Fed's 2% target, which has now paved the way for a possible rate cut. However, September's rate cut, though, the exact size of the cut is varied between 25 and 50 basis points. And into the euro, we can see this current pattern is actually bearish and therefore could lead to a significant downturn. That being said, I still feel there's room to reach the region of 110.65 to 111.10.45, and therefore traders should closely monitor signals and adjust their risk management strategies just in case the pullback turns out to be as low as 108.70.80. Nevertheless, the dollar index, which measures the greenback strength against a basket of 6 major currencies, and the euro weighted at 57.6, tumbled from 103.05 to 102.40. So as I mentioned, all eyes will be on the Jackson Hole Economic Symposium on the 23rd, 24th August, Sydney time. Turning to dollar yen, the rebound from 142 extended higher last week, but faced heavy resistance where this trend line was broken and now serves as a resistance at 149 figure 10. From the rejection, we can see the market potentially may head lower and initially look towards the region of 147 to 146 and maybe to the call, still waiting at 142, even though there was a challenge there and rejected. Overall, the top side likely to remain as heavy supply where the broad trend is, and as I mentioned, look to the downside. As we move on to the sterling, we've got a Marubozu candle from the break of 128.60 and now opens up further to the upside, which could stage a rally on to 130 to 131. Any pullback is likely to be shallow, with support seen around the mid 128. A stellar performance was seen for gold as it rallies over $50 or 2.2% and reached an all-time high of 2,509 on Friday and now consolidates above the 2,500 handle. In light of the current pattern, I am now neutral as we may see a pullback towards the region of 2,480 to 2,470. But with that being said, with gold hitting 2,500 being the broader target, the strategy as 3,000 now talks within the broader market. So therefore, we may see a break beyond 2,520 and rally on towards that topside area of 3,000 and reassess from there. We can see the broad uptrend is way lower and currently holds around 2,400. So there's a lot of volatility expected this week, and most probably see much of a whipsaw price action. But as I mentioned, overall, the talk of the move beyond 2,500 in 2025 could ignite the move eventually onto $3,000 an ounce. Wrapping up with oil, the market was whipsawed and actually staged a 2% fall on Friday and now looks towards that level of 74.80. A break there could reintroduce a further bearish sentiment and lead the market on towards that bottom side of the range, seeing roughly around $69 a barrel. Any upside attempts? Well, the market needs to clear that 76.10.30 to reinstate the call back to $78. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the new week.